So last week, the S&P 500 grazed the 6,100 mark, which means finally our long-term target has been acquired. So today we're going to look at exactly how this happened, and more importantly, what it means going forward, especially into 2025. So if you blinked, you may have missed it, but on Friday, December 6th, the S&P got to within 0.03 of a point of 6,100. So we're going to take the liberty and round that number up, and so our official target has been acquired now. And so in hindsight, this seems like it was inevitable, but we know that wasn't the case. In fact, 11 months ago, it didn't seem likely at all. So let's start there, going back to what the trading environment looked and felt like in January. And so as we know, it was an epic comeback from the October 2022 low at first. So we're up about 40% from that point. And again, really a straight shot higher from the October 2023 pivot and rally as well. And don't forget, that took us right back to the 2021 high. And as we know, that was followed by the extremely tough 2022 bear market. And don't forget, that was defined by inflation and of course, a higher interest rate environment, a rising dollar, all of which led to a lot of comparisons to the 1970s. As we know, that was, of course, attributed to inflation as well. And from a price action perspective, the S&P 500 was extremely volatile, was in a very big range. In fact, was net flat for that 10-year period. And so a lot of people were talking about a similar scenario now developing over the ensuing years. And of course, we're only a few years into it, but that was reason enough for many investors to think that it was going to be very difficult to get back above, say, that 4,800 mark that we were just at the 2021 highs. So 1 week later, after that, in the third week of January, we got the push to new all-time highs, right? Above that 4,800 mark, but still didn't really change people's minds, thinking that the rally has been, too fast, too soon, even though, right, it took 10 months to get here and 15 months to get back. So at that point, again, up 40% from the low, but net flat over the last 2 years. So another way of looking at it was that the market has some catching up to do after doing, again, nothing on a net basis over the last 2 years. But still, there weren't many people that thought this was an actual breakout. However, as everyone knows, the crux of our analysis here is looking for patterns, bullish, bearish, short-term, long-term, respect every one of the breakouts and breakdowns when they occur. So when that happened, of course, we looked at this and said, this is one big inverse head and shoulders pattern. Now, of course, everyone has their thoughts and feelings about where to put these lines and what they mean. If you can identify a body information, that's all you need. And then we can make price objectives based on that. So in this case, of course, going, say, from about 3,500 to 4,800 is 1,300 points. That gets us to what? 6,100. And that's what it is. So again, it's very difficult for some people to believe that can happen because you look at this, it took 2 years to be constructed, and we see this 6,100 target directly above. Some people would assume that there's no way it's going to be achieved. But we know a 2-year pattern could take a long time to play out. And along the way, I was asked many times, when is this actually going to be achieved? And there's no timetable on this. Now, of course, it has been achieved now with 2 weeks before the end of the year. But if we had an extended volatility period above the breakout zone, it could have lasted into 2025 for who knows how long. Now, the other part of it is that we know that it was a 37% move up into 4,800. But the way math works, as we know, with a measured move, if you're taking the point total, again, 1,300 points over 3,400 is going to yield a much bigger percent move. That denominator goes higher, right? So 4,800, 1,300 points on top of that, 6,100, but the percent move is smaller. We're talking about a 37% move to get to 4,800, but then only, quote unquote, 27% move above that. Now, again, 30% or so above the most recent new all-time high, again, did not seem likely. And so we have to treat every breakout as tentative until we see some additional follow-through from that point. So, as we talked about many times, the most important part of this move was what came right after, right? So As we know now, there was only one down week from the October low all the way to the first week of March. We didn't know that at the time. So when we had those additional 3 weeks worth of advancing action with the S&P closing near the very highs of the week each time, they gave us that cushion. They gave us the leeway. They gave us more confidence that this could possibly work out, because it meant that the S&P then can pull back, can endure some volatility along the way, and still keep going, right? And so, of course, that's exactly what happened, right? From March to April, down 6%. Then again, from July to August, down 10%. With those happening at higher prices, that kept the 6,100 target in play, right? So that was the long-term target that we continue to have in the back of our minds, which we always talked about, knowing, of course, that we needed smaller patterns to work out for that to actually transpire. So to review, again, no surprises, but this is something that's very important. This is what really helped the uptrend continue, because uptrends are constructed by successful bullish patterns happening over and over again. How are they constructed? Number one, holding support or creating support. So in October 2022, there really wasn't any real support to look at near term. We had to create it there. That was support discovery. From that point, you get an upside follow through. That, of course, is a necessity. And then the ensuing pullback needs to be a higher low. That sounds extremely easy to understand, but as we know, in 2022 on the way down, that was not the case. And that is the beginning stages of a bullish pattern, which should then get constructed. We see the breakout, the follow through, have the upside target hit, and then repeating that process. Number 7, of course, extremely significant, because if that can't be repeated, there's just going to be a series of failed bullish patterns after that. So going back to that same chart, we know that there were 10 upside targets, achieved 10 successful bullish patterns before this last one. The most striking part about this is that 9 of the 10 successful patterns had their upside targets achieved after we had that trigger through 4,800. You see all of them here, right? And so if someone were to ask me, and they did many times, how could we get to that point? We needed to see smaller versions eventually work out, which of course they have continued to do all along the way. So another reason why we had some confidence, especially as the breakout continued, is that we've seen it before. Clients of ours that have been around for a while know the last big target that we had in print that actually got acquired was after 2020, 2021. And so the same type of thing. We know all about COVID, right? The worst 5-week decline in history, right? 35% down or so. So that slingshot higher got us close to the highs by the time the summer came. That was a 45% move. So we identified this as a bullish cup and handle pattern with a target of 4270. So you're talking about 45% move, and we were saying that a measured move can get us another 32% higher. Again, no one wanted to hear that. How could it possibly be? The world was still on fire. There was nowhere close to having some resolution about what was going to happen with COVID, but price action is price action, and we have to respect it. And so along the way, as we know, in 2024, we did not have any pullbacks to that breakout zone. But in 2020, it happened twice. As you recall, we had the 10% decline from the August or early September high, then again in October. That held twice. And of course, after that, things changed. We started to get a more consistent uptrend that we recall started in late 2020 and went all the way until the end of 2021. So the question now is, what's the next big target after finally achieving this? And I wish I had a better answer for you, because we don't have one right now. Again, how did we get a big upside target? Well, we just talked about 2 examples. This measure move was created by volatility, extreme volatility preceding it, the COVID crash and the bear market in 2022. That is the only way from our work to get an upside target, unless you're talking about Fibonacci extensions, so forth and so on. But from a pure classical pattern perspective, we just need to see more volatility, right? We need to see bigger drawdowns that, of course, are eventually bought, and the S&P can fight its way back once more. Now, that may sound overly bearish, because does that mean we can't go higher without that? No, not at all. As we can see here, over the last 8 years or so, there have been periods where it started with successful bullish patterns and extended further from that, right? We saw the end of 2020 into 2021 didn't have a lot of upside targets. And now after getting this most recent upside target of 6,100, we can still go higher, just a matter of utilizing and leveraging the smaller patterns. But at some point, we have to understand that there is going to be a bigger volatility event. There is going to be an extended downturn. It's all about what the market does with it. And once we see that big come in, once we see support hold or support established, then we can start identifying where bullish patterns start to come from again. And how is that going to happen? Well, I think we all know by now. Follow the same steps. Most importantly, seeing repetitive bullish patterns continue to work. That's it for today. Don't forget to check out these videos and subscribe. I'll talk to you next time. Thank you.